Al Rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager. This is Al Rolls reporting from the Forex Super Model building, where we're about to conduct the weekly review for Monday the 7th to Friday the 11th of December 2020. Next stop, Professor Code in the lab. Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 7th of December until Friday, the 11th of December 2020. Basically, we're going to conduct a variance analysis on what actually happened during that week and what we suggested might happen. So let's have a look. I've written this up already, save time. So weekly data for Monday the 7th to Friday the 11th. You can see that the euro dollar over the week dropped 19 points. The euro yen minus 21, sorry. The euro pound plus 115. The pound dollar minus 141. The pound yen minus 207. And the dollar yen at 0. Now, these are the model flows, the raw data. So we've got an unopposed negative driver in the pound at minus 463, and then we've got no backdoor flows at all. So we've got opposing positive flows going primarily into the yen, the dollar next, and the euro. So the euro was the positive rock, the dollar was the positive mover, and the yen was the positive secondary driver. So that was the situation over the week. So if we take it day by day and let's see how we got on then. So Monday, which was the first day of the week, what was it, the 7th of the 12th. So let's have a look then. So on the negative side we had pound euro. On the positive side we had dollar yen. Right, plus 69 for the yen, plus 47 for the dollar, minus 43 for the euro, and minus 73 for the pound. This was on an activity of plus or minus 116, plus 116. So we had a negative opposed driver in the pound, a negative rock in the euro, a positive mover in the dollar, and a positive secondary driver in the yen. So we had fairly balanced flows on Monday, but we had pound weakness with the opposing flows primarily going into the yen and the dollar, with the euro being the negative rock. So what did we say on Monday morning in the briefing? We said stay short euro dollar. Yeah. So stay short, and that was obviously a hang up from last week when we were suggesting stay short euro dollar. Otherwise we wouldn't have put the stay there. So what actually happened on the daily flows, we had minus 22 on the euro dollar over that day, and we had that sort of situation. So arguably, I mean, we'll round all this up at the end when we sort of make our excuses or otherwise. So on Monday then you had pound weakness, yen strength, and a bit of dollar strength and euro weakness. So yeah, well, you know, you can't argue too much with that. It's not brilliant. It's a small tick. So for the modelling there. So let's move on to Tuesday. Right, so Tuesday the 8th. The 8th of 12th. Right, let's have a look. Tuesday, pound and yen on the negative. Euro dollar on the positive. Right, plus 41 on the dollar, plus 9 on the euro, minus 5 on the yen, and minus 45 on the pound. So we had activity of plus or minus 50, and we had a negative opposed driver in the pound, negative rock in the yen, positive mover in the euro, and positive secondary driver in the dollar. Right, so what did we suggest on Tuesday? We said sell euro dollar, and we also said sell pound yen. On that daily basis we got minus 7 on the euro dollar and minus 13 on the pound yen. So we got arguably we sort of scraped in on Tuesday as well. So we were on the right side of the flows, but they were no great shakes. So again, just about a small tick for Tuesday. So let's have a look at Wednesday. So Wednesday, what is it, the 9th of the 12th. Let's have a look. Right, so we've got euro yen dollar on the negative, with the pound on the positive. So we've got plus 149 on the pound, minus 20 on the dollar, minus 46 on the yen, and minus 83 on the euro, and giving us plus or minus activity of 149. So we've got an unopposed positive driver in the pound, a negative rock in the dollar, negative mover in the yen, and a negative secondary driver in the euro. What did we say Wednesday? We said still stay short euro dollar. Okay, we said still stay short euro dollar, and we got on a daily on the pair we got minus 21 points on that. So arguably again no great shakes, but we were on the right side of things, so minor tick. So we're up to Thursday now. Up to Thursday, Thursday the 10th. Thursday the 10th to the 12th. What have we got? We've got the pound on the neg on its own, and we've got yen, dollar, euro, yen, dollar, euro on the positive, euro plus 231, dollar plus 57, yen plus 46, and the pound minus 334. 334 on activity of plus or minus 334. So we've got a negative unopposed driver in the pound, a positive rock in the yen, a positive mover in the dollar, and a positive secondary driver in the euro. Right, so we've got heavy pound selling on Thursday to the exclusion of all else really. No backdoor flows, predominantly going into the euro complex and to a lesser extent into the dollar and the yen. What did we say on Thursday? We said USD strength. USD strength, sell, what did we say, euro dollar, euro yen. And on a daily points move, we got plus 56 on the euro dollar, and we got plus 58 on the euro yen. So a big no-no really on the flows for Thursday. And what was the cause of that? Well, predominantly we had massive outflows out of the pound, and we also had a situation here. So we had basically massive outflows which disrupted the flows, and we ended up, so we said USD strength, and we actually got USD strength, so we weren't wrong about that. We were on the wrong side of the pair trade though, the individual pairs, the euro dollar. The reason was we got dollar strength, but we had relatively more euro strength. And that was off the back of the fact that the dominant flows from the pound went into the euro complex rather than the dollar. Now, therefore, we're on the wrong side of the flows for the euro dollar and the euro yen. So we'll give ourselves a big no-no for that for Thursday. That didn't pan out particularly well at all for the modelling, right? But we did suggest that the pound was going to be weak. So the problem with predicting first thing in the morning is that you have to take an overview of what's there, and we thought these pairs were going to be the ones that were going to do the business, but we also pretty much predicted the pound weakness. So yeah, but still we were wrong. So fair enough. Let's look at Friday. Friday, then the last day of the week, which is the 11th to the 12th. What have we got? We've got pound, euro on the negative, and we've got dollar yen on the positive, plus 170 for the yen, plus 66 for the dollar, minus 42 for the euro, and minus 194 for the pound. And we've got activity of plus or minus 236. Right, so we've got a negative opposed driver in the pound, negative rock in the euro, positive mover in the dollar, and a positive secondary driver in the yen. And what did we say for Friday? We said USD strength, EUR weakness. So USD strength, EUR weakness. Right. Okay. And what did we get? Well, if you look at the pairs, the euro. So we've got the euro dollar. We've got minus 24. Euro yen. We've got minus 49. And the euro pound, we've got plus 31. So Euro weakness, yes, apart from against the pound, because the pound was taking a major bath on Friday. So pretty much okay on that, because we did suggest the pound was going to fall. So what about the dollar side of it? We've got the euro dollar there. We've got pound dollar minus 59, and dollar yen minus 17. So these were the individual pair flows for Friday. So dollar strength then. Dollar strength against the pound, obviously. Dollar strength against the euro. But dollar weakness against the yen, but minor. So on balance, we retrieved the situation on the Friday, and we were on the right side of the flows, really. So we'll give ourselves another tip for Friday. Thursday was our lemon day. So if we look at what we said over the situation, then really let's roll it up. So basically, we said if you look at the dollar, the euro, the yen, and the pound, and this is the short side, and this is the long side. Right, over the week, we said we wanted to be short the euro and long the dollar, short the pound, okay, and long the yen. Right, so we were long the yen and the dollar, which was correct for the week, and we were short the pound and the euro. The pound we were certainly right to be short of, and the euro was caught up in these cross flows and ended up creating a bit of havoc on the Thursday. So arguably we weren't a million miles off the modelling, but we had this wreck on the Thursday which did us no favours. But obviously that has got nothing necessarily to do with our trading performance. That is purely our assessment of the situation there. So, and if you look at interestingly, if you look at the other pairs against the pound in the pound complex, so if you look at what is it, the pound New Zealand, and what was it, the pound AUD and the pound CAD, over the week, minus 380 for the pound New Zealand, minus 496 for the pound AUD, and minus 255 for the pound CAD. So those were the points that each of those pairs in this case lost over the week. So the pound really got a good pasting on those. And though interestingly, this is a bit of a plug for the what's it called, technical issues series which we've done. So if you look at the site and go on to the technical issues and the part 1, how volatile is my FX pair, if you look at that video, we rank the 28 FX pairs that we use in the modelling, and the rankings are, so the New Zealand dollar is 27th most volatile out of 28. The Australian dollar is the big boy at 28, and the pound CAD is 25. So it's quite clear that our assessments of pair volatility worked out were sensible, because the biggest the biggest or most volatile pair of the lot in terms of our modelling is the pound AUD, and that was the case. And the next was the NZ pound NZD, etc. pound CAD. So take a look at that if you get the time, and it might help you when you're planning out your trades. So, however, so as you know, we were riding 20% long. So we were, you know, what's that, 300, 800, 1200 points came off those three pairs, and we had at least 3 trades in each at 20% long. So we were quite busy on the trading front, managing that position. We basically swapped out and bought it, those 3 pairs the entire way down. We now have excellent entries, albeit we've paid for them, but we've got excellent entries, and they bounced considerably, these. And the reason we've done this is because we are so confident about the pound positioning. And famous last words, of course, with the weekend coming up. But we are confident, and we believe that that this will pay tremendous dividends in the future. So that's what we've done. So just to sum up then, over the week, we pretty much got the overall flows right. We got slapped about a bit on the euro pairs, because that's where it was most difficult. And, you know, on balance, we could see that the GBP was going to get a good roasting. And despite the fact that our core position is long, we didn't alter this because we have a more long-term view. So I hope that helps in rounding up the week, and see you on Monday for the daily review. Thank you very much.
Hey, it's snowing outside.
Yeah, Christmas is coming up.
Let's sing together. Snowman
With the happy rolling snow.
with the boys outside, there's butter, no place to lie. We are with merry snow they say.
It was made of snow by children.
Having spoken to Professor Code, we're now off to see the senior trader for his assessment of the week. Hello, I'm the senior trader at the Forex Super Model, and this is our journal style weekly review for Monday the 7th to Friday the 11th of December 2020. Now, what sort of week has it been? Well, it's been pretty wild out there. I must say it has been wild. And wild on the pound. And as you know, we're 20% long the pound, and we're right up to our neck in the pound. We've got 38 trades running, and we've had to do quite a bit of jiggery pokery this week to keep the show on the road. And well, what's been happening? Well, as you know, we're trading the entire pound complex, so. The back end bolt-on ones predominantly have been giving us the grief. The New Zealand dollar pound, pound New Zealand, pound CAD, excuse me, and the pound AUD. So as you'd expect, these are the most volatile pairs. And if you look at the sort of model volatility of these pairs, they're in the right up there. They're in the last 3 of our model volatilities, and the pound complex as a whole is the most volatile complex. So it was a case of fill your boots. We got about, well, those 3 complexes, the CAD, not the complexes, the pound pairs in the CAD, the AUD and the New Zealand dollar, ended up swinging about 1150 to 1200 points, obviously, but that was their open to close on the week, but they actually swung a lot more. So you were looking at probably up near the 2000 point swing if you were involved in the full dose. Did you get both barrels? Yes, we did get both barrels, and we weren't in a small way either. We had multiple trades in these pairs, And actually the whole pound complex situation was reversing out, whereas our long account was massively up. It was about, before we went into all this, it was about, at the peak it was 9.5 to 10,000 points up. Well, obviously we had the corresponding downside on the short account, but then we swung right down to 2,500 points up on the long account, and obviously we had the equivalent profits on the short account. Although, because we were 20% long, we were losing money at 20% of the market shift. So that was where we were. So it wasn't just about the pound. I mean, we sort of pretty much knew, or thought we knew, that the dollar was going to come up towards the end of the week, and as such, we suggested that, and we sort of had that situation in mind. And we've got the Fed next Wednesday, but we're not going to talk about going ahead, because that's more a discussion for the Monday daily review. But nevertheless, if you just look over the horizon a bit, you've got this Fed rates decision. We've had the EU rates decision. I think it was Thursday this week, and so we've had some big data events, which have really helped, wrapped up in this sort of revolting sort of GBP Brexit monster, and that's what's really been swinging around. I've been looking at the comments on a few sites we look at, social media. A lot of people have got really mashed this week on day trading, stops and what have you. There's a lot of people who are talking about 5-figure losses and things like that. Well, and ultimately it's relative, isn't it? 5-figure loss may be small or big. But ultimately, who cares? You're in charge. So anyway, so let's have a think about what the main highlights were. So the main highlights was basically swapping out our pound AUD NZD CAD trades as we went. So in the long account, we were getting mashed down on those trades. And at suitable intervals, we were swapping those out. So we weren't adding to them. We were just taking the loss and then going in at a lower level. And normally we wouldn't be doing this on a swing trade, but this isn't a swing trade. This is a long-term or medium-term positional trade, and as such, we're more than happy to get a right royal pasting on in the short term, because in our view, we're going to be holding these long pound positions for months ahead, and they're going to start paying dividends, huge dividends in the future. I mean, realistically, if you think about it, I mean, does it make any sense for the UK, which is the 5th largest economy in the world, to be getting the bejeebers knocked out of it by the New Zealand dollar? Not really. No disrespect to New Zealand, but there you go. We are the 5th largest economy in the world, and we are the UK, and take it or leave that attitude, but that's our view anyway, and obviously it's based more on that. But there you go. That's what we've decided. We're 20% long, and that actual that ability to absorb swing down then is quite important. Because and we don't use stops, as you probably know. We're not using stops. We've got the account sufficiently funded to absorb any Brexit news coming out Sunday night or whenever they deem to wheel out this Brexit news, even if they do. So whatever happens, we think we're pretty spike proof. They're going to have to try hard to spike the New Zealand dollar, pound, CAD and AUD down much more. And if they do it, it'll be like a blink and you've missed it. So as long as you're funded, you'll find that it's just a nasty tail on your graph, no more than that. So that's the way we've been sort of working on it. And what else has been happening? Well, our short-term swings in the euro dollar, euro yen, they've been sort of semi-behaving but misbehaving at the same time. The euro's been caught in all these cross flows, and that has been where it's at really. So to sum up, really, it's been an interesting week. If you were long the pound and belligerently stayed long the pound, which we have done, and I hope if you were that you've come out not too unscathed. And you've got to remember, of course, is that if you're swapping out for a longer term positional trade, ultimately you will be in in theory at the absolute or near the absolute floor, and once the market starts rising, it is likely to never see those prices again in the next 2-3 years. So you can go to bed with your book and not worry as you turn the pages. So that's our situation, and I hope you're doing okay in the markets, and I look forward to speaking to you again during the week if we do an educational video, and if not, next week in the weekly review. So thank you very much. Clearly a difficult week here at the Forex Super Model, but we're now off to see the risk manager to see what he's got to say. Hi trading cats, difficult week on the market. Probably 2 lemons. This is L Rolls signing off from the Forex Super Model building for the weekly review.